Hello everyone, welcome back to the channel. Today we're diving deep into how you can legally slash your tax bill and keep more of your hard-earned money. We're breaking down all the deductions available from Section 80C to 80U under the Income Tax Act. Let's get started. Alright, let's kick things off with the big kahuna of tax deductions, Section 80C. Think of Section 80C like that super popular restaurant everyone's raving about. We're talking about deductions on life insurance premiums, Employee Provident Fund, EPF, Public Provident Fund, PPF, and National Savings Certificates, NSCs. Section 80C also lets you claim deductions on 5-year fixed deposits, ELSS mutual funds, and home loan principal repayment. The combined limit for deductions under Section 80C is 1.5 lakh rupees in a financial year. This limit is shared with Sections 80CCC and 80CCD1. Now that you've got a handle on Section 80C, let's move on to its close cousin, Section 80CCC. 80CCC is specifically designed for those who believe in the power of pensions and annuity plans. It allows you to claim deductions on contributions made towards certain pension funds, including those offered by LIC. Remember, the 1.5 lakh rupees limit applies here too. Let's talk about the National Pension Scheme, or NPS for short. Section 80CCD is here to make your NPS journey even more rewarding. 80CCD1 covers your personal contributions to NPS with a deduction of up to 10% of your salary or a maximum of 1.5 lakh rupees. 80CCD1B lets you claim an additional deduction of 50,000 rupees exclusively for your NPS contributions. 80CCD2 covers your employer's contributions to your NPS account, limited to 10% of your basic salary plus dearness allowance. The best part? 80CCD2 is not part of the 1.5 lakh rupees limit. That's right, an extra 50,000 rupees to boost your retirement savings. Let's shift gears and talk about your health. Medical bills can really put a dent in your finances. Section 80D offers relief when it comes to medical expenses. You can claim deductions on the premiums you pay for medical insurance for yourself, your spouse, your kids, and even your parents. For yourself, your spouse, and your children, you can claim a deduction of up to 25,000 rupees. If you're also paying for your parents' medical insurance, you can claim an additional deduction of 25,000 rupees if they're below 60 years of age, or 50,000 rupees if they're senior citizens. Section 80D also covers preventive health checkups with a deduction of up to 5,000 rupees. So, go ahead and get that full body checkup you've been putting off. Life can throw unexpected curveballs, and sometimes those curveballs come in the form of disabilities. Section 80DD is dedicated to those who have dependents with disabilities, providing financial support. You can claim a deduction of up to 75,000 rupees if the disability falls between 40% to 80% and 1,25,000 rupees for severe disabilities. A valid disability certificate is required to claim this deduction. Facing a critical illness can be overwhelming, both emotionally and financially. Section 80DDB offers deductions on expenses incurred for the treatment of specified critical illnesses. For non-senior citizens, the deduction limit is 40,000 rupees, and for senior citizens it is 1 lakh rupees. A certificate from a specialist doctor confirming the diagnosis and treatment is required. Keep all your medical bills and reports handy for tax filing. Education is the key to success, but it can be expensive. Section 80E allows you to claim a deduction on the interest paid on loans taken for higher education. There's no upper limit on the amount of interest you can deduct, but this deduction is only valid for 8 years from the year you begin repaying the loan. Plan your finances accordingly to make the most of this benefit. Buying your first home is a huge milestone. Section 80EE is designed for first-time home buyers, offering a deduction of up to 50,000 rupees on the interest paid on your home loan. The loan amount should not exceed 35 lakh rupees, and the stamp duty value of the property should not be more than 50 lakh rupees. This deduction is a real game changer for those starting their homeownership journey. Make sure to meet the eligibility criteria to avail this benefit. Owning a home is a dream for many, but property prices can be a hurdle. Section 80 EEA offers additional tax benefits for those investing in affordable housing. You can claim a deduction of up to 1.5 lakhs rupees on the interest paid on your home loan. This deduction is applicable if you're purchasing a house that meets certain affordability criteria. You can't claim this deduction if you've already claimed it under Section 80 EE. The world is going green, and the Indian government is offering incentives to encourage people to switch to electric vehicles. Section 80 EEB offers significant tax benefits for those who choose to go electric. You can claim a deduction of up to 1.5 lakh rupees on the interest paid on a loan taken to purchase an electric vehicle. This deduction is valid for loans taken out on or after April 1, 2019. In a world driven by material possessions, it's easy to forget the importance of giving back. Section 80G offers tax benefits for donations made to eligible charities and relief funds. You can claim a deduction of either 50% or 100% of the donated amount depending on the organization. Keep your donation receipts and the organization's registration details handy. This deduction encourages the spirit of philanthropy and helps those in need. Finding a decent and affordable place to rent can be a challenge. Section 80GG offers relief for those who pay rent but don't receive house rent allowance, HRA. You can claim a deduction on your rent payments capped at the least of 5,000 rupees per month, 25% of your total income, or the actual rent paid minus 10% of your total income. This section is a boon for self-employed professionals, freelancers, and others who don't receive HRA. Keep your rent receipts handy to claim this deduction. Investing in scientific research and rural development is crucial. Section 80 GGA offers a 100% deduction on donations made to eligible institutions and organizations in these fields. This deduction is available for non-business taxpayers. Support these vital areas and reduce your taxable income at the same time. Participating in the political process is a responsibility. Section 80 GGC offers a 100% deduction on donations made to political parties or electoral trusts. The donation must be made through non-cash modes. Strengthen the democratic process and reduce your taxable income. We all love a little extra something in our savings accounts. Section 80 TTA allows individuals and Hindu undivided families, chuffs, below the age of 60 to claim a deduction of up to 10,000 rupees on the interest earned from savings accounts. This deduction only applies to the interest earned, not the principal amount. Keep a healthy balance in your savings account and save on taxes. Managing finances wisely becomes crucial in our golden years. Section 80 TTB offers special tax benefits for senior citizens aged 60 years and above. They can claim a deduction of up to 50,000 rupees on the interest earned from various sources. Senior citizens claiming this deduction cannot claim the deduction under Section 80 TTA. Evaluate both options to choose the most beneficial one. Living with a disability can present unique challenges. Section 80U offers tax benefits to provide financial relief to individuals with disabilities. Individuals can claim a deduction of up to 75,000 rupees for disabilities between 40% to 80% and 1,25,000 rupees for severe disabilities. A valid disability certificate is required to claim this deduction. And that's a wrap on all deductions from 80C to 80U under the Income Tax Act. Remember, these sections help you legally reduce your tax burden and keep more of your hard-earned money. If this video helped you, give a thumbs up, share it, and subscribe for more insightful content on personal finance. Now go forth and conquer your taxes. I'll see you in the next video.